We are live. There we go. And welcome to everybody. Thank you very much for joining us on Behind the Markets for this morning's edition on Finance Tuesday, 13th of June, 2023. We're midway through the month. And this is, remember, we're getting close to halftime. Remember, this is the halftime point where we all just start getting ready for the end of the year, where we all start getting the second half of the year. So at the end of the year, people, you can be 3-0 down. I think what was the old Champions League game where you're 3-0 down and you come back 3-3 and you win in extra time. People, the game is not over till it's over. The year is not over till it's over. It is up to us to get it right. All right. So thank you very much to everybody. Thank you very much to everybody. Vernon, how are you doing, my brother?
Never better. We're doing wonderful. I think it's a lovely morning. There's never a day in the month of June that is not great. Every one of it is beautiful.
It is. It is. It is. Right, my brother. Let's get down to it. It is today, as I said, Finance Tuesday. We're going to be going through quite a few things. Let's get down to it. Right. So getting into the roundup, we did see that the Kwacha actually gained and broke the losing streak against the dollar. It actually gained and broke the losing streak against the dollar yesterday and actually had quite a strong gain yesterday of 1.6%. It was a shock gain, actually. So we're going to try and see whether this is something continuously. We're trying to see if there were any signals in the market. There were no signals of a debt deal, anything that came through that changed the perspective. So we'll see if this is a continuing trend. If it is, then the banks know something we don't know, or it is just something in tax season, something in the air. Around this time, you also do start getting around a few tax payments sneaking into the economy. So that's usually around the first thing that we start seeing. But we did see that the Kwacha got stronger yesterday by about 1.6%. And as you can see, as a result, we did see that even the US bond index went up by 3.48%, and also generally the bond index went up by 0.5%. We did see that the stock market stayed exactly the same as yesterday. No movements yet, no bigger news, and we will be going through a few, one or two companies that have released a little bit of news generally, but we are seeing that the dollar is still in a buying trend. But yesterday we did get a surprise reversal of about 1.6%, bringing dollar year-to-date gains down to 10.09%. We do also see that we did see that against the rand also chipped away by 0.56%. We have been getting a stronger rand in the picture as well. That's why we really had this acceleration of the rand up to almost 1.9 earlier, but it shrunk down by about 0.56% yesterday. As you can see on the month, dollars are up 8.5%, rands are up 12.78%. That to me is the bigger inflation risk. Because of the cross-border trading community. They go to South Africa a lot. Remember, it's Dubai or South Africa. They grab things, they come back. So that stronger rand is actually going to create a problem in the prices of things that they're going to offload into the economy. And that's a lot of things, by the way. So always remember, there's a lot that comes to those cross-border traders. But we've seen 80% of the days that we've seen in the last month, we've seen the rand has been trading relatively strong. In terms of bonds, we saw the GRZ bond index up 0.15%, up 12.15% year to date. Plus, we've also seen that in terms of US dollars, we've seen it up 3.55%, reversing those losses where we almost got into loss-making territory for the year. And interest rates are down 0.006% yesterday, down to 12.14. Still not down to that 12.01 where we were, but down to about 24.11. Sorry, not 12.14, 24.11. And this is actually affecting, obviously, higher interest rates, affects lending rates in the commercial sector, GRZ bond rates. Commodities, we did see copper come down yesterday about 0.89%. Oil had the biggest hit because of Goldman Sachs' revision of oil prices, down 3.14% on the international market, while gold is up. While gold in US dollars went down by 0.55%. That's actually something that's quite of interest. In terms of wealth insurance assets, we saw cryptocurrency down 4.1%, Ether down 7.2%. You see what I mean when I say these are very volatile. One-day movements of 4% and 7%. These are big swings. Okay, so if you go and stuff your whole wealth into these are the things that ends up happening to you. So be careful of the very volatile assets. While gold was down 2.14%, all of these were victims of the Kwacha getting stronger, while simultaneously the underlying assets also got weaker. As you can see, gold weaker, cryptocurrency in dollars got weaker, and also Ethereum got weaker in dollars. So down 71.12% year to date and 59.23 year to date on the week. Bitcoin is down 0.8%, Ethereum down 5.74% on the week, while gold is down 0.36% on the week, mainly due to yesterday's switch of events. So obviously, this is how the broad market looks as of yesterday, 12th of June, 2023. We do see that bonds are up 12.1% year to date. Stocks 11.6, haven't moved since last week. US dollars up 10.1% year to date, while gold is up 18.6. Remember, it tripped into 20 and now it's chipped back down. While cryptocurrency up 71.4, 71.1 and 59.2, Bitcoin and Ethereum respectively. But always remember, people, there is high volatility. Dollars, gold, Bitcoin, Ethereum, lots more volatility, especially Bitcoin and Ethereum. So if you're going to put all your wealth into there and you lose it next week, please don't come back and say, no, but Munyumba, you told me, I warned you not to put a heavy hand amount into there should you want to. If you don't want to, don't do it. Okay. The good thing with all these assets, in fact, you can actually access them even locally. When I say locally, I mean there are local portals for them for you to store your money through them. These are conversations we'll have coming down the week. But gold, as I said, these are wealth insurance assets. Whenever the stocks in the bond market are trending lower and the market is in a defensive position, you'll often see dollars, gold, Bitcoin, Ethereum, these things go up while the rest of the market pulls back a little bit. But when the market roars, you'll see gold, dollar, you see all these things start to come down as well. So they kind of seesaw against each other. You'll never pick the right one. I think people need to stop thinking like a lottery event. You'll never pick the right one. You'll just have a great balance, which will give you a steady growth rate. That is all you're looking for as an investor, a steady growth rate. Okay, that's why we risk blend assets, is to just get steady growth throughout our portfolio. If we're looking at the four horsemen, Japanese PPIs came down yesterday by 0.8% from 5.1 from 5.9 to 5.1 in the month of May. We also saw negative 0.7 deflation in PPIs in Japanese assets. But we saw in Egypt, core inflation was up 40.3% from the previous month of 8. This is not month on month, this is year on year. But my goodness, it is suffering. We also saw in the US, we saw auctions happening across many. Long-term yields were going upwards while short-term yields were going downwards. That is a flattening of the curve, showing that we're slowly exiting these recession fears of the US, while unfortunately, due to industrial demand, Japanese machine tool orders were down 22% from the previous year, down 6 year on year. We're down 22.2%, and that's also that's an even further decrease from the previous month, showing a slowdown in the Japanese industrial sector. And that basically concludes our markets. We are seeing softer growth still around the world. Interest rates are still elevated. Inflation fears are still coming down. There is subdued inflation, though it seems to be a little bit sticky. We're waiting for CPI data from America today. We're waiting for the Federal Reserve to make a decision. That's going to help drive most of the financial agenda globally, and also now will trickle into affecting us as a country. Now, some of the news that came out yesterday, Zafico to invest 55 million kwacha into treatment lines and pole drying equipment to double their output capacity in the coming years. Following a strong 2022, where the Zafico, the company, has moved into the billion kwacha club in terms of the stocks that are valued at a billion kwacha. Remember, the latest one was Puma, that joined, but just before that, Zafico had also joined and become a billion kwacha stock. They are now doing some capex spending to see if they can increase their production levels from 70,000 poles to 160,000 poles in a given year. Their biological assets have been valued quite high. That was been the main part of their income statement, growing very well. The valuation of their biological assets have actually been growing. They are doing environmental studies to see what can happen of this, or what impact this can have on them. But as a result, Zafico is actually looking to expand its capacity. Therefore, we're looking at some top line growth, probably coming in the next 2 years, probably coming in the next 1 or 2 years to now supplement all of this. And therefore, it'll probably catch up with this. Remember, it is a relatively underpriced stock. When you look at it from a book value perspective, it's got a strong book value. But remember that 5 billion out of that 6 billion kwacha assets of total assets, or the 5 billion net assets, is really just biological assets. It's really the value of the trees that they have in the ground, which can easily get lost due to anything. You can have disease or anything that can happen. So that's a bit of a risk on their balance sheet. But in general, they are still undervalued even under that. So they do have a strong balance sheet, but we're looking now for the stronger profits, outside of the revaluation of the biological assets, we're looking for a stronger cash-based profit to actually try and justify the billion kwacha valuation, or even the stronger part of the billion kwacha valuation of the company. We did also get news yesterday that the Pensions Insurance Authority will be looking to relax the 51% requirement for custodial services. Now, as of 2022, the occupational pension industry sits at about 12.8 billion, but there are no custodian banks for the pension industry, because Pensions and Insurance had said if you want to be a custodian bank in Zambia, you are for pension assets. So, in other words, if your workplace has a pension or is part of a multi-employer pension, not your gratuity, workplace pension, in other words, they've actually put one together for you, those assets are not being held by a custodian. So, what a custodian does is that they become an extra safeguard, so that there'll be the actual pension administrator, there'll be the investment manager, and then there'll be the custodian, the one who actually holds the asset certificates. So they hold the stock certificates, they hold the bond certificates, they hold things for the pension fund to ensure that the investment manager cannot go fiddling around the bends in the background if they want, and maybe borrow against assets or things like that. They hold these things for them. Now, it's not easy for them to do all those diabolical things anyway, but it's just an extra safeguard that you often find in the securities and exchange industry, where the collective investment schemes have to work with a what's it called, with a custodian bank. So a bank will basically hold these certificates for the client, and therefore for a transaction to be done, they'll need all the proper authentication backing it up. So now we haven't had custodial services in the 12.8 billion pension industry in Zambia. That's where the problem has started to come out. And we've been trying to do that. That's been a risk that's been consistently flagged in the pension industry. So news now that they're trying to relax it, because the current banks in Zambia that do offer custodial services are not 51% Zambian owned. So I think that was that was the issue now. So they're trying to relax the local ownership requirements to try and see now if they can get this risk out of the way, and then later maybe the 51% Zambian owned banks might be able to come into the fold. But for now, it really is up to them to now just start relaxing that requirement, so that a lot more pension assets can now be safe, can now be much safer. It's not that they weren't safe, it's now that they'll be seen as much safer because there'll be custodial services offered to them. So that's another conversation. And finally, we did get news that there was a Zambia-focused private equity fund which reached a $40 million closing on first round close after being granted approval on 31st May. Monster Capital Partners, which is actually situated in Mauritius, completed its first close of $40 million of its flagship $100 million fund in its landmark to raise for Zambia private equity, for a Zambian private equity firm. The fund, which is going to be focused on growth companies in sectors like financial services, clean energy, and agribusiness, is currently domiciled in Mauritius. Now, there was no legal framework previously in Zambia for this, said their CEO, but now obviously working with the Securities and Exchange Commission, also working with the regulators, they actually are now able to get their approval to operate as a private equity fund. So Zambia is getting its first shot in the arm of private equity finally entering into our industry. And the hopes will now be, now that this has happened, many more will come afterwards. So it's kind of hopefully that now it's opened the door. They've shown that it can be done. Much more private equity can now start coming into Zambia. And remember, private equity is a very good stimulator. Private equity and venture capital are very strong stimulators of stock market activity, because your private equity funds often look to exit, or at least they look to work a lot with the stock market. And hopefully this will encourage a lot more VC funds, and those VC funds will be able to now operate directly with the stock market. Is basically lining up on some of the news there. Now, in terms of our commodities news, what we have seen yesterday is gold was down, mainly because Goldman Sachs entered a new valuation into the market to say that not a new valuation, a new prediction of gold of $86 a barrel for the end of the year, down from their 95. So they had been the gold bull. They've had a very strong oil. My bad. Oil. They've oil bull, but now they're saying that Russian supply has recovered. And the strong recovery of Russian supply has therefore led to their case that due to strong recovery in Russian supply, they cannot see the oil market holding a $95 price. So therefore, they've pushed it back down. So that's already showing that the cap on the oil will probably be $86 at the end of the year, which is probably going to push it somewhere into these 70s. So we've seen oil tumbling mainly due to that, and the revision came in spite of the fact that Saudi Arabia wants to decrease production effective July. So they're seeing that Russian supply on the market, which has recovered very strongly, is actually already counteracting anything that Saudi Arabia can do. Now, the last thing we want is that Saudi-Russian oil fight that happened last time. That was good for us for a little bit, but it did slow down economic growth generally. So we're trying to see if we can avoid Saudi Arabia and Russia fighting on oil prices again, where they were basically fighting. But that's even how oil prices got to negative points at some point in terms of the global market. But we somehow never took advantage of that. That's another story. In global news, Morgan Stanley and JP Morgan have turned bullish on emerging markets local bonds. So this is good news for us. Should we get our debt story sorted out, you've got Morgan Stanley and JP Morgan who are saying that they are now eyeing emerging markets local bonds, and they want to try and buy them before their interest rates start to come down, because they're saying emerging market rates are on their way down. Now, Zambia is in the developing markets and the African frontier markets. So remember that unfortunately, due to this, our African markets have actually been suffering worse due to the debts that are already sitting on their books than than emerging markets. But a flood of capital entering emerging markets should actually help the demand for bonds coming here. So already you're starting to see that if your debt gets resolved, you've got Morgan Stanley, JP Morgan, and these international banks who are basically salivating, looking for places where they can now start buying up bonds. So this is why I keep telling people your biggest threat to the higher yields that you're getting now on your bond portfolio are these guys, who are basically these wolves who are waiting on the side of the road, waiting to enter, waiting for the gate to get open. This is why I keep saying pile in now before the rates come down, because the biggest push for rates coming down are these fellas. And all they're waiting for now, okay, because they can already see a lot of their central banks are starting to hold the line on now starting to think about maybe slowing down their rate hikes. They're already starting to see this. They're through the debt crisis in America. So now they're looking at where they can allocate capital. And they're waiting for countries like Zambia to resolve their issues. The moment you get an announcement that your debt is resolved, these guys come trundling into your bond market. And what do they start doing? They start buying up things. Remember that your bond auctions are 2.6 billion kwacha. That's $100 million. These guys are $1 trillion banks. Okay, let me remind you, these are $1 trillion banks. They can do that in a heartbeat. Okay, they can do $100 million like this and it won't scratch them at all. So remember, that's why they can come here and they can dominate your market. So the first thing you also want to always keep doing is making sure that at this time when rates are as high as they are, gobble up as much as you can so that the average interest on your portfolio is actually making quite a bit for the next couple of years. And therefore, especially if you're doing 3 to 5 year bonds, therefore, if you pack in as many as you can now, as inflation comes down, probably in the second half of the year going into 2024, as inflation starts to slide down going into 2024, going to 2025, then you already have very high interest bonds that are already at a wider margin than where inflation will be. So just kind of keep that in mind. Especially now that you're seeing the biggest threat of energy prices maybe holding the line. Food prices are much slower, though the only threat to food prices is El Nino, because there is obviously the worry that it'll wipe out a lot of the supply chains again. That's the biggest threat right now to global supply chains. But your food prices are on the way down globally. Your oil prices are held flat. And then if these guys come in, your exchange rate gets stronger. So therefore, the inflationary pressure starts to get weaker and weaker. So what you're trying to do is pack in as much of the bonds that are there now, so that as you're going further, you've got very high interest rates sitting in your portfolio. Other big news, final big news for the day, is Apple hit an all-time high yesterday and was within striking distance of a $3 trillion valuation. Shares rose 1.6% yesterday as bringing the tech giants year-to-date gains to 41%, less than a week after Apple unveiled their new products. called the Vision Pro headsets with hopes that it will become the next smash hit. So a lot of people are packing into Apple. 41% year-to-date gains, currently heading towards being a $3 trillion. At the beginning of this year, they did for a moment become a $3 trillion company. Now, $3 trillion, people, I want you to understand this. The African GDP is 2 trillion. Okay. Africa's GDP is 2 trillion. Okay. One company's value is more than our GDP for a year. That shows you how big Apple is and how big and important this company is to the global system, or the global ecosystem. So heading towards $3 trillion, mainly on the bet that their Vision Pro. The two biggest trends you're actually seeing on the stock market that are buoying them is one, Apple's Vision Pro headsets, and two, artificial intelligence, especially companies like Nvidia who are making chips for artificial intelligence. Artificial intelligence and VR headsets, obviously virtual reality seems to be a strong bet. It's a sad thing because Mark Zuckerberg bet heavily on virtual reality the year before, and he got no love for it when he was trying to sell us on the metaverse. But it appears that Apple seems to be a much more trusted entity on trying to get people into virtual reality. Though people are trying to figure out how is this going to work? Are people just going to walk the streets with VR goggles on, like zombies? What's it going to look like? It's going to be a big part of the story, but this is where the global economy is actually looking. Apple heading towards a $3 trillion valuation. And finally, Vernon, let's get into our charts of the day before we get into our deep conversation from yesterday. Our first chart of the day, our main conversation today is what we call China falling. The Chinese population is scheduled to actually have peaked now and is heading towards a tumble. So China looks like it's going to shave off about 100 million people from its population, not through anything nefarious, people. It's just that there's not much birth happening in China, and the percentage share of the elderly population in China is scheduled to rise from where it is right now, about 15%, heading to 30% by the year 2050. It is the outlook is possibly that 1 in 3 people in China will be above 65 years. Okay, the retirement population, 1 in 3. Right now, the record is held by Japan, which is 1 in 4. 1 in 4 people in Japan is above 65 years, and yet the population are not getting married, and as a result, the Japanese population is actually contracting, and their economy is still struggling to grow properly. Because the thing is, the wealth of a nation comes in the strength of its labor force. So the weakness of the Japanese labor force, therefore, has actually weakened the economy. Though it is standing at a very strong position, the growth prospects are basically non-existent. This is the biggest threat to China right now. It's the aging of their population, because that takes away your workforce. It makes government have to spend a lot more on social security. It takes a lot of activity out of the economy, because unfortunately the elderly population cannot work in factories. They do not work a lot in general. They do work a bit, but they do not work a lot. So you need the younger, more vibrant people in your economy working. Now, Zambia has the opposite. We have a very young workforce, but nowhere to put them to work. That's where the problem comes with us as a population. So we're looking to try and put our young population to work more in order to stimulate our economic growth. China is struggling because they do not have a young population anymore. At the same time, the average Chinese family is having less children, holding back marriage, and they're going much lower because of the cost of living in places like Shanghai. So there was a study that was being done, and I think the Wall Street Journal also did a video expo piece on what's happening to marriage in China and what that'll do to affect. Now, why am I talking about this? Well, China is the center of demand for all commodities. They're the key driver of the electric vehicle industry. If they're going to have a slowdown in their population, that's going to affect the demand for a lot of our things, okay? Because we trade with China. In fact, a lot of Africa is reliant on trading with China. So the less industrious activity going on in China, the less demand they'll have for our copper. So we're going to have to try and figure out where else to try and send this stuff. So that's where the biggest issue is now. However, the interesting thing about China is there has been some shaky demand on things like soya beans. There has been shaky demand even on crude oil, but look at how stable demand for copper has been. So that actually does show us that the appetite for copper in China keeps rising, and other essentials have turned upwards. So there's been a steady demand for copper, mainly because they're in the middle of a transition of EVs. Remember, China is the fastest transitioning country, and they've also got the biggest producer of electric cars, BYD. Which is already outpacing Tesla, and that is copper demand coming in through China. If you take a look, that is a straight rise up. Now, things like soybeans are not at their peak, but they're starting to pick back up again. But remember, we were talking about how soybean prices are already being pulled down by slow Chinese demand from the pork industry already. And while we're seeing crude oil starting to pick up, Chinese demand has struggled a little bit. Though the airline travel has been good, Chinese demand is also slowing down. But the other thing also, by the way, that's affecting China's demand for oil is that demand for copper. Why? Because China is switching vehicles. That's why. You know what they've done, Vernon? I think what most people don't recognize is China's actually put in laws that makes it very difficult to get an internal combustion engine car, a new one. They've actually made it very difficult to get a license plate, for example. You can get a license plate for almost free for an electric car, but try and get a license plate for an internal combustion engine car. You're paying thousands of dollars, and they put you on a serious waiting list, and they make it very difficult. And they've got a limited amount that they give out in places like Shanghai. So already there's already policies that are being put to drive the Chinese towards EVs. Okay, so there's a strong policy that's being driven towards pushing the Chinese towards EVs. And I think that's what's holding back crude oil demand and keeping the copper demand pushing against the seam. So China is actually doing EV transitioning faster than anyone else. That's why they're 50% of the EV sales. And that's why you're going to see that Southeast Asia is going to be the biggest contributor to EV growth. It is all China. They are the main ones who are doing most of the heavy lifting here. However, we have seen that the Chinese currency is also starting to pick back up. Chinese currency's latest dive looks overdone. So we are seeing that the yuan might actually start picking back up again in strength. That's not good for us because remember, China is our second highest import source. So if the currency gets stronger, meaning their products get more expensive, meaning for us, we end up importing inflation through their currency, through the transmission of their currency. So we're waiting to see if the yuan will actually get weaker or stronger. We need it to get weaker for us to not have transmitted inflation coming out of China into Zambia. So hopefully that this can hold, because right now the weak yuan is good for us. But we'll see whether it holds altogether. Those, Vernon, are our charts for the day before we get into yesterday's conversation of being the good steward. But they are hopes, basically, the fact that electric vehicle transition is creating the marketplace for a lot of what are the minerals we're trying to pack up together, be it nickel, cobalt, and copper. And if we were smart about working with Zimbabwe and President Mnangagwa, we could actually now put in lithium as well. I'm going to keep using that name until the Americans know how ridiculous it was to call him that. I know that Mnangagwa is a very difficult name, even for Africans, but Mnangagwa sounds like a dance you do on the Man United field. I'm telling you, it sounds like the dance people do when Man United get beaten horribly. But you are seeing a stronger growth in copper demand altogether. I don't know what your thoughts are, Brother Vernon, before we get into our topic of discussion.
I think we can pretty much cruise to the topic of discussion, and we wrap up, of course, on the aspect of being chipper.
Right. So, and we're going to say morning to everybody who's joining us. Thank you for all of you who have joined us, from Trevor, Doreen, Nkosi. We've also seen Sonka. We'd like to acknowledge as many of you, Black Chain Joe. Thank you very much for joining us. And no, Black Chain, you are not too late. As he said, and apparently we are now senseis, Brendan. We are now teachers. We're now known as the economic senseis for our people in the morning. Let's get back to our topic of discussion. Yesterday, we were talking about stewardship. And I said I wanted to just go into this because stewardship does affect people's view of money. This is why I said you must have goals in faith, because that affects how you deal with other parts of your life. Your faith affects how you deal with family. Your faith affects how you look at work. Your faith affects how you look at your mental development and your emotional state. Your faith affects so many parts of your life. It's got so many moving parts to it. That's why it's very good to center yourself in your faith. Now, I cannot dictate what faith a person should have, I know the faith I have. But I cannot dictate it. But what I just know is that when a person does have a strong centering in faith, and you see this even in the Muslim community, their centering in faith allows them to now have a strong ideology that affects family, that affects work, that affects money, that affects even their physical. It affects various parts of their life. And because of that grounding in faith, it allows for decision making to flow from those areas. Now, I want to just quickly remind people what are the 8 pillars of a good steward. And I'm looking at it from a Christian steward specifically, is that there are 8 mindset pillars of a good steward. And one is that God is the creator of everything. So you look at him, therefore you're reliant on him, and therefore answerable to him as the creator of everything. You are not the final authority. You live under a final authority. And therefore he is the owner of everything. And these are some of the Bible verses that are attached to it. But he's the owner of everything as well. And the third one there, and sorry, just blocked by the logo, is I am a trustee. Now, as I said, a trustee is one who is put in charge, but not ownership. And I read yesterday from Dumisani's book where he talked about the fact that he just has dominion. He has authority over the things that he has authority over, his business, his money, his clothes, all these things. He just has authority over these things, but he does not have ownership of it. Now, as a trustee, it means that you don't own, you are in charge, because the end of your life will simply take away all your ownership. There's already an Inter-Succession Act that can step in, Inter-Estate Succession Act that can step in instantly to basically state who the administrator is and already set up who can receive all your assets. The moment you cease to breathe, there's already a law that comes in place to divide up everything you thought you owned. You can bury yourself with things, but I can tell you right now, no one, and I guarantee you this again, Vernon, no one will care. In fact, they can even rob your grave if you're not careful. So the first thing you must recognize is that stewards see themselves as trustees of wealth. They don't see themselves as the owners of wealth. They see themselves as trustees of wealth, answerable to a higher authority who both created and owns that wealth. And therefore, they're preparing it for the next trustee and the next trustee. Then they also see themselves as God's fiduciary. Now, a fiduciary, someone like myself, for example, is somebody who, through their license or through their professional, whichever, is obviously usually in financial services. But the key distinguishable point of a fiduciary is their decisions and advice have to be in the interest of the person they're serving, not themselves. They cannot give out self-serving decisions. So my decisions, if I'm giving someone advice on markets and where to invest, I have to give them the best information that will help them, not things that help me. My interest must be subject to their interest. It's their interests that come first. And this is pretty much the pillars of Christianity. Not my will, Lord, but your will be done. It's pretty much the basis of a fiduciary. Okay, it's what Jesus said. The spirit is willing, but the flesh is weak. And he's there, Lord, take this cup from me, not my will, but your will be done. That is pretty much the spirit of what a fiduciary is. One who puts the will and the desires of their customer above their own will and operates in their best interest before their own. So that is what a fiduciary must do. So the trustees look at themselves as their higher power's fiduciary. Okay, and they're operating in that higher power's interest because they are the owner. So even a trustee of a pension fund is basically operating in the best interest of its members, making sure its members get the best pension, making sure its members get the safest protection for their assets. So it's operating in that way in the best interest of its members. And the same thing you do for God. And the other thing is the fourth principle, the fifth principle of a good steward is that they are prudent with resources. Okay, they use resources wisely. They use whatever they're given very well and very wisely. You know, the Bible says, "He who is faithful with little becomes faithful with plenty." They pursue biblical wisdom. It's written there, 2 verses there in Proverbs that should help you. They pursue wisdom, and they pursue biblical financial wisdom to do that. They practice planning and goal setting, and they also have to prove themselves trustworthy. Okay, they have to prove themselves to be trustworthy, and they understand that their track record is very important to the person who they're trying to who they're serving in order to gain trust from them. So you can see the mindset that has been formed by somebody, and these are the ways that it affects money. So now there are 5 pillars of a good steward, which I want to go through today so that people understand the mindset of a good steward of wealth. And whether you look at money for ownership or you look at it as stewardship, I'm looking at it for people who look at it like stewardship, because a vast majority of wealth holders tend to look at wealth in the stewardship perspective. And the first one is that they are diligent earners. And they look at and the first thing they do is they look at their work as serving a higher purpose. Okay, they look at their work as something that is a noble cause in society. Now, in the Fidelity stress-free versus stressed millionaires survey, they found that the stress-free millionaires, the people who were enjoying their wealth, saw their work as a noble cause. Okay, they actually believed in what they did so much, Vernon, that even though they had about $1.7 to $2 million worth of assets and could easily retire earning the same, or if not more than what they were earning, they did not want to quit. Okay. Now, I don't know if in that survey maybe they took into consideration some guys were hiding from their wives, but the majority of those people found their work was very enjoyable and they did not want to quit. So part of this, and by the way, there's biblical references for all of these things, but they did find that their work serves a higher purpose. They're very customer centric. They're very purpose driven about their work. When they're on radio, for example, they think about the listener more than they think about themselves and the salary they're getting. It's not about pulling a paycheck. It's about serving somebody with something that's really important to them. They're also financially responsible. You know, there's a verse that says, if you cannot take care of your family and your loved ones, you're worse than an infidel. I think that's in the book of Timothy. And so basically they practice financial responsibility. They work out of responsibility too. They work out of purpose, but they also know that there is a responsibility they have to themselves and their loved ones, and they do not want anybody to have to take care of themselves. They're very independent, but they're also very grateful for the work they do. They seem very grateful for the work that they do. They also see that God is their source and their work is their stream, that there has been a hand of providence that has provided for them throughout their work life and their journey, opening doors and opportunities for them. And they've worked very hard to get to those points and to be prepared for those door openings. But they do acknowledge that there is a source, there's an invisible hand that has worked through their career. They're dedicated to their work. That's another thing. They're very dedicated to the point where they're reporting early. They're doing what they can. They're dedicated to delivering well from their work, and they enjoy their work, and they're very content. Now, they're not complacent. I know the moment you mention content, everybody gets touchy about it because people think it's settling. No. Being content means being happy as you are, but you can still improve. But you're still happy, okay? You see, there's this thing that if things are not perfect, I'm not allowed to be happy. That is perfectionist thinking. It's very depressing. It actually leads you to have and by the way, perfectionist thinking can be closely linked with mental health issues. Okay, because you're always constantly under depression and stress. So you stop being progressive in your thinking, and they enjoy their work and they're content with it. They earn their full potential. So whenever they go for it, they don't sit there and say, this is my salary this year, I'm parking, I'm okay. No, they keep developing themselves. They keep improving themselves. They keep trying to actualize their full potential in earnings capacity, and they're very generous with their excess. In other words, they tithe quite high. They give to charity. They're strong tithers and they'll give to charity. And I'm not saying they tithe everything. I think the average millionaire globally tithes about 9% gives 9% of their wealth to charity. And I think a lot of them give to their religious organizations as well. The second part, Vernon, I'm going to close down on this one today, is that they are prudent spenders. Tomorrow I'm going to talk about the wise saver and the cautious debtor. But today I'm going to talk about the prudent spender. And the prudent spender means, Vernon, they do not form emotional attachments to their expenditures. In other words, the Bible does say do not create idols. So do not turn the things that you own into idols, things you worship, that if they left you, you'd be in depression. Okay, so if your car stops working, or if you have to downgrade a car, you're crying. No, what are people going to think of me? No. You have changed. It's okay. You've had to downgrade vehicle. It's life. They avoid greed. Okay, that's the other thing about them. They avoid just stockpiling things for the purpose of it and make sure that everything has a meaning and a use around them. They practice contentment. They're very happy with the things they have, and they're not constantly being envious of other people. They're very happy of what they have. They're not wasteful. Okay, they try not to get things for the purpose of wastefulness. They enjoy things, but in moderation. This is the thing people don't understand about being prudent. You can enjoy things, but you do it in moderation, and they budget very strictly. By the way, as I said, there's biblical references for all of these. So tomorrow we'll be going through the wise saver and the cautious debtor and how this actually helps building wealth in terms of the good steward. So we've got the good steward who earns money and spends it very prudently. Then we've got the other part of the good steward who will save and invest wisely and be cautious. And then on Friday, we're going to go through and finally, we're going to go back to the diligent earner for business. But then finally on Friday, I want to talk about the generous giver. That at the end of the day, the good steward is about being generous with money, not silly generous, but actually practicing it. But take the snapshot in your mind as the way to measure yourself as the good steward of money, because this is the purpose, Vernon, of how to look at your relationship with money, so that when you're forming financial plans, we know how to build them. That, people, is where I close out today. Vernon, any thoughts before we disappear?
I don't really. I just want to appreciate the fact that you were able to walk us through. It's sort of more of a sermon and less of a business conversation.
Money is a sermon, but money touches the heart. You know, Jesus
Absolutely.
preached more about money than even heaven and hell combined. Money is serious. When Jehovah can talk about money, it's serious.
Absolutely. I think combining the same too with God, I think it will essentially broaden people's perspective towards money generally. And should be, I mean, money is heavily, contextualized in the Bible. So why not, run away from the Bible? So essentially, I urge you all to pray as you handle money. And of course, as more money comes, you should have, God's wisdom to guide you as you're handling multitudes of money in these years to come, as the economy seemingly will be better, as we are hopeful for such kind of a future, primarily as I think it's great. We appreciate also to the listeners as well as the viewers who are able to join us as well for today's episode. It is always lovely to have you guys.
Cheers and have a wonderful day. See you all tomorrow as we talk about the good steward in investing. Cheers.
Wonderful. Thank you.